Welcome back to Investing Talk podcast. Today, we're tackling a question I know many of you are asking. Is strategy a good time to buy now? This company has definitely been making headlines, and we've gathered a stack of sources to help us understand its truly unique situation. We'll explore everything from its core business performance, the software side, to its massive Bitcoin holdings, and what all of this might mean for you if you're considering an investment. Before we jump in, if you're finding our discussions valuable, please remember to subscribe, like, and maybe leave a comment below. And hey, if there's a specific company you'd like us to look into, let us know in the comments too. Okay, so let's turn our attention to strategy. What exactly are we looking at here beyond the headlines and all the buzz?
Yeah, it's a fascinating case. Strategy, which actually just rebranded from Microstrategy on August 14th, 2025, it isn't your typical software company at all. Our sources really highlight this dual nature it has. On one hand, yeah, it's an established player in analytics and business intelligence software, but uniquely, and this is the key part, it also holds substantial Bitcoin reserves. It's become a core part of their corporate treasury strategy. It's almost like they're trying to ride two horses at once.
Yeah.
You know, one's the, well, currently slowing software business, and the other's the wild bucking bronco of Bitcoin.
That's a great way to put it. Two very different worlds colliding in one company. So the key question becomes, how does this unique blend, this kind of corporate Jekyll and Hyde, actually impact its financial health and its overall performance, especially for someone looking to maybe invest?
Right. To really get a handle on strategy, you have to look at both sides.
Let's start with the roots then, the software business. What do the latest numbers tell us about its fundamental performance there?
Okay, looking at the core software business first. The 2024 full-year revenue, our sources show it was $741.2 million, which was actually down 3% year over year. Not great.
Down 3%.
Yeah. And the company reported a net loss of $85.4 million for 2024. That was an improvement from the $134.7 million net loss in 2023, but still, it's a loss,
Still in the red?
deep in the red. The operating margin was also negative at negative 21.4%. And if you zoom out a bit, connect this to the bigger picture, this underlying software revenue continues a decline we've seen for multiple years now. It's definitely lagging behind its leading SaaS-focused peers, both in terms of innovation and, crucially, recurring revenue growth rates.
Okay.
Analyst consensus actually projects sustained losses for 2025, the mean estimate of around negative $4.07 per share. So it really points to ongoing, pretty deep-seated operational challenges in its traditional business. The software engine itself just isn't firing on all cylinders.
So we're seeing a struggling core business. Does this make strategy more reliant, maybe even over-reliant, on its Bitcoin bet? And how does that shift the risk profile for investors? It sounds like they kind of need that Bitcoin side to shine.
Absolutely. That's the dynamic. And here's where it gets really captivating, the Bitcoin holdings. As of July 31st, 2025, Strategy held an astounding 205,000 Bitcoin.
Wow. 205,000.
Acquired at an average price of $29,800 per Bitcoin. That's not just exposure. It's a massive, almost all-in bet at this point.
Right.
And this significant Bitcoin exposure now drives a substantial portion of the company's book value and, critically, its periodic earnings volatility. That's because of these fair value accounting rules. Essentially, they have to constantly revalue their Bitcoin holdings on their books. So market fluctuations directly hit their reported earnings, even if they haven't actually sold a single coin.
Ah, okay. So paper gains and losses really swing the number.
Exactly. Now, on the financial health side, as of June 30th, 2025, Strategy had about $79.8 million in cash and equivalents.
Which sounds okay.
But then there's the other side of the ledger. $2.34 billion in total debt.
Billion. With a B.
Billion with a B. Primarily convertible senior notes. These are essentially bonds that can be converted into company stock under certain conditions, which adds another layer of complexity, potential dilution down the road.
That is a pretty substantial debt figure, especially for a company with a core business showing losses. What does that kind of debt-to-equity ratio tell us about the company's solvency, its financial stability?
Yeah, that immediately raises questions about solvency risk. Our sources indicate the debt-equity ratio is over 3.5 times.
And how does that compare?
Well, to put that in perspective, a typical software company in its peer group usually ranges from maybe 0.5x to 1x.
Okay, so strategy is way out there.
Significantly more leveraged, yes. This reflects a highly leveraged capital structure, and that reliance on, well, volatile digital assets for a substantial portion of its value carries inherent risk. Think about it. If Bitcoin's price drops significantly, the value of their main asset shrinks, potentially impacting their ability to service that debt.
Right, the collateral value evaporates.
Precisely. However, it's worth noting that the company did secure a lot of cash recently. $6.8 billion in aggregate net proceeds in Q2, and another $3.7 billion through late July 2025. That has certainly bolstered its balance sheet and liquidity, at least for now. They've been very active in raising capital.
Mostly to buy more Bitcoin, I assume?
Largely, yes. That seems to be the primary use of funds.
Okay, that's a huge number they raised. So they've been funding more Bitcoin buys, but how did the core business actually perform in the latest quarter? Let's unpack those recent Q2 2025 earnings, announced August 4th. Our sources seem to paint a bit of a nuanced, almost contradictory picture here.
Indeed, it's not straightforward. One perspective highlights that revenue actually missed analyst consensus by about 2%, and the net loss per share was wider than the prior year. This was largely driven by higher crypto impairment losses.
Okay, those write-downs, again, when Bitcoin's price dipped below what they paid.
Exactly. Those losses they have to recognize on the books. So from that angle, it looked tough financially. However, another view of the same Q2 results reports $114.5 million in revenue, which was actually up 2.7% year over year.
Oh, okay. So some growth there.
Some growth, yeah. And a healthy 68.8% gross margin. And quite impressively, a 69.5% growth in their subscription services revenue. That's a key metric for software businesses.
Right, recurring revenue. So on one hand, we see operational misses and those impairment losses hitting the bottom line. But on the other, there's some top-line growth and pretty strong subscription performance within the software part. It's a real mixed bag. But then there's the other side of the coin, literally with Bitcoin. What happened there in Q2 that truly grabbed all the headlines?
Ah, yes. That's the pivotal point. Strategy also reported a staggering net income of $10 billion in Q2.
10 billion.
$10 billion. That's an almost 9,900% increase year over year.
And that wasn't from selling software.
Not at all. It was almost entirely driven by approximately $14 billion in unrealized gains on its Bitcoin holdings under those new fair value accounting rules we talked about.
So just the rising price of Bitcoin on paper.
Precisely. This astonishing figure, purely from Bitcoin's price appreciation during the quarter, perfectly encapsulates Strategy's dual identity. It shows a company whose market movements, whose stock price, is now arguably less about enterprise software sales and much more about the volatile tides of crypto. It really forces investors to ask, are you buying a software company that happens to hold Bitcoin? Or are you essentially buying a Bitcoin proxy that happens to have a legacy tech business attached?
That's the core question, isn't it?
It is. And this massive paper profit surge really propelled the stock price and captured huge media attention.
And you mentioned they're still working on the software side.
Yes. And beyond the crypto headlines, it's worth noting Strategy isn't entirely abandoning its software roots. They unveiled new AI and data solutions at their Strategy World 2025 conference. They're aiming to empower data control and automation. This push is critical because our sources indicate a sustainable turnaround in that core analytics business, getting that recurring revenue growing consistently. That's absolutely crucial for any kind of long-term re-rating of the stock, regardless of what Bitcoin does day to day. It's a signal, I think, that they can't rely solely on crypto forever.
Okay, that makes sense. Now, for those of you considering a trade, maybe not a long-term hold, let's look at the charts. What does the technical analysis tell us about Strategy's recent price action?
Right. Looking at the technical landscape, the stock has seen a recent price range roughly between $305 and $390. This was between August 1st and September 5th, 2025. It shows high volatility, which, frankly, is no surprise given its strong correlation to Bitcoin's price swings. Key support levels seem to be identified around the $323, $325 area. Resistance levels are up around $385, $390. Multiple rallies have sort of stalled out there.
Okay, a ceiling there.
Seems like it. The 50-day moving average is currently near $346, with the longer-term 200-day moving average near $316. The relative strength index, the RSI, is sitting at 42. Generally, that indicates it's mildly oversold, but not extremely so. Still has room potentially to fall.
Not a screaming buy signal based on that alone.
No. And the MACD histogram, another momentum indicator, actually turned negative in late August 2025. That often signals a short-term neutral to slightly bearish trend. But again, the longer-term swings, as always with this stock, are highly correlated to Bitcoin prices. The technical picture is really just reflecting crypto's ebb and flow.
Given all this complexity, the software struggles, the huge Bitcoin bet, the debt, what's the overall sentiment around the company right now? What are analysts and the market thinking?
Well, Analyst ratings currently lean towards a hold, maybe with a slight negative bias. We haven't seen major upgrades or downgrades right after the Q2 earnings, suggesting analysts are also kind of in a wait-and-see mode.
Makes sense.
There was some interesting insider activity on August 26, 2025. The CEO, Lifeng, was shown both acquiring some small indirect stakes, but also executing significant sales, selling 16,390 Class A common shares.
Huh. Selling shares, it's often seen as a negative sign, right?
It can be, yeah. It's a bit of a mixed signal from the very top. Meanwhile, social media sentiment, unsurprisingly, remains incredibly tied to Bitcoin news cycles. It swings rapidly with crypto price action.
Noise, mostly.
A lot of noise, yeah. And on a more cautious note, multiple law firms have announced securities fraud investigations and class action lawsuits related to the company's disclosures and Bitcoin strategy. That has certainly garnered investor attention and increased scrutiny, adding another layer of potential risk and headline volatility.
Right. Lawsuits are never good news. Okay. As we think about that core question, is strategy a good time to buy now? What are the upcoming catalysts, things people should watch out for that could influence the stock, both short-term and maybe longer out?
Okay, short term, you should definitely keep an eye out for the Q3 2025 earnings release that's expected around October 29th. It'll be another crucial snapshot of both the software progress or lack thereof and the Bitcoin situation. We also have things like ETF rebalancing potentially affecting flows around August 29th, institutional investment disclosures due September 30th. And of course, any significant news on Bitcoin ETFs or broader crypto regulatory developments will likely cause sharp, immediate price responses in strategy stock.
So very event-driven in the short term. What about longer term?
Longer term, I think any material change in their corporate Bitcoin treasury strategy would be huge. Like if they suddenly announced a significant sale of Bitcoin or maybe another massive accumulation, that could profoundly impact the stock. And as we discussed, a sustainable turnaround in the core analytics business, showing real, consistent, recurring revenue growth, that is absolutely crucial for any kind of positive long-term re-rating. They need to prove the software side isn't just fading away.
And what about the rumor mill? You mentioned the headlines. We know the market loves to speculate, especially around a company like Strategy. Any particular whispers out there?
Oh, there's always chatter. There's market talk about a potential large-scale Bitcoin acquisition by year-end, maybe using some of that capital they raised. And then there's speculation, maybe more hopeful, thinking about a strategic AI or cloud partnership with a major hyperscaler. A big cloud provider like Amazon, Microsoft, or Google.
That would be a big deal for the software side.
Huge deal, yeah. Could really validate their tech efforts. The ongoing securities litigation is another factor. Could see a settlement, which might remove an overhang, or an escalation, which would be negative. Rumors also persist about increased institutional ETF allocations into Bitcoin, which would indirectly benefit Strategy as a major holder.
Okay, lots of potential catalysts, but also plenty of uncertainty. Let's flip the coin. What are the truly significant risks for investors considering Strategy right now?
Number one have to be the high leverage. That $2.34 billion in debt remains a critical risk, especially given its reliance on volatile Bitcoin as essentially collateral. There's substantial downside if Bitcoin retraces significantly. Those unrealized losses we talked about would flow through the income statement and negatively affect equity value.
Could even trigger issues with the debt covenants, potentially?
It's certainly possible, depending on the terms. It's not just a potential hit to the stock price. It's a real threat to the balance sheet itself. It could force tough decisions regarding that convertible debt down the line. Then there's the ongoing decline, or at least stagnation, of the core software business. It means there's less of a fundamental floor, less downside support if the crypto cycle turns negative.
Right, nothing to fall back on.
Exactly. And finally, broader software sector valuations and just general macro volatility also add to the share price fluctuations. Strategy tends to be much more volatile than its software peers because of that Bitcoin layer. It's a particularly rocky ride.
Okay, so bringing it all together, what does this all mean for you, the listener, as you consider that question? Is Strategy a good time to buy now? It's clearly not a straightforward investment decision.
No, definitely not. Our analysis, drawing from all these sources, suggests an overall rating of, let's say, 4 out of 10, maybe a generous 4. The equity value remains highly speculative. Performance is overwhelmingly driven by Bitcoin price movements, not by fundamental growth in the core software business. The financial leverage is high, the recurring operating losses in the core business present significant balance sheet risk, and frankly, there's just no clear, convincing evidence yet of a turnaround in those core software fundamentals. Analysts are still projecting sustained GAAP net losses.
So for long-term investors looking for stability, maybe some predictable growth, this probably isn't the right fit. It sounds like you're essentially making a leveraged bet on Bitcoin with a struggling software company attached.
That's a fair summary. Exactly. While there might be opportunities for short-term trading due to its high volatility, if you have the stomach for it, and robust risk management. Big if. This is primarily for sophisticated traders. For long-term buy-and-hold investors, our sources really indicate it's not attractive right now. You've got negative earnings, a declining core business, high leverage. It strongly suggests better risk-reward opportunities probably exist elsewhere, whether that's in the software sector or maybe even just investing directly in crypto assets, if that's the exposure you want.
It really highlights how crucial it is to understand all the facets of a company, especially one with such a unique kind of bifurcated strategy like this. Well, thank you for joining us on this really interesting look at strategy. We hope this discussion has provided you with some valuable insights to make your own informed decisions.
Absolutely. Understanding this interplay between traditional business fundamentals and these new, often volatile asset strategies is just so key in today's market. Strategy's journey really forces us to ask, in an age of digital assets and AI, what truly defines a company's fundamental value anymore? Is it the balance sheet? Is it innovation? Or is it just the ability to hold on to the next big thing, whatever that might be? It's definitely a question worth pondering.
That's a great thought to leave our listeners with. We appreciate you tuning into Investing Talk podcast. Until next time, stay curious and stay informed.